What do emerging markets? They have a great year next year. Let's say they're up 50%. What's Bitcoin going to be up? 300? It's all driven by the same liquidity cycle now. And therefore, it's actually potentially the greatest gift we've ever been given as a macro trade.
Solana has had a tough market, and its stock has seen some pretty high rises and low declines in recent months. Solana, which started from a modest position in October 2023, reached impressive heights during Christmas, but corrected itself with the arrival of the new year. However, the digital currency has proven resilient by following a trajectory that indicates the possibility of recovery and growth. On the other hand, at the beginning of 2024, Bitcoin stands at $42,665, fueling market optimism. A set of influential factors suggests that a potential supercycle is underway. One of the main drivers of this potential supercycle is the halving event planned for April 2024. Historical data shows that the price of Bitcoin has increased after each halving event, but not immediately. Historically, halving events reduces the reward for mining new blocks, and therefore, there may not be enough Bitcoins available to purchase, which will increase the price to entice long-term holders to sell. In today's video, we will tell you about Raoul Pal's view on Solana and Bitcoin and why he thinks these two are the biggest profitable cryptocurrencies in 2024. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. Liquidity grows assets first, and the economic cycle determines the rest of the assets. So if liquidity continues to improve, and there will be ups and downs, then technology and cryptocurrencies will continue to outperform. 2024 looks very interesting. Good for all the small caps, good for all the emerging markets, because the dollar is also expected to weaken, and good for all the commodities. Therefore, we should see a traditional cyclical cycle of economic recovery. If we face a gigantic delta risk globally based on a global debt cycle, then diversification will not bring any benefit. So if this cycle is predictable, this cycle will be next. So you should focus on the highest risk-return ratio you can get with the same unit of risk, the highest profitability you can obtain with the same unit of risk and adjusted to risk. Once again, technology and cryptography outweigh everything. So cryptocurrencies are interesting because people think that it's some kind of weird internet money and it's not tied to anything else. This is pure macro. This aligns perfectly with the global liquidity cycle. Its risk curve corresponds to the same liquidity cycle as, for example, the risk curve of bonds. So in the first part of a recovery process, what you tend to see is first a recovery in treasury bonds, and then you tend to move further up the risk curve. And then 2 years later, everyone turns to the local market and lends at high risk to the private sector in the world's worst emerging markets for risk. It's the same in crypto. So the first part of the bull market is still led by Bitcoin. We had a leak, that of Solana, which exploded because it had its own adoption story. But in general terms, what happens is that when global liquidity becomes positive year after year, and it is already very close, that is when the risk curve turns on. This is when Ethereum starts to outperform Bitcoin, and we have what's called the alt season, which is the smaller tokens, because people are just coming off the risk curve, which is also into the Bitcoin ETF. Many crypto specialists are new to understanding these things, so Bitcoin and ETFs are leading the way. What will happen the day this is announced? Generally, there is probably a sale, buy the rumor, sell the fact. And then everyone, once the dust settles, will say, next is Ethereum. Now, Ethereum is half the size of Bitcoin, or even a little smaller. So if you invest the same $1 billion in Bitcoin and then transfer it to Ethereum, it will have a huge effect. It's about putting an elephant of the same size in a smaller bathtub, and that's what happens. And then money moves out of Ethereum and off the risk curve into less liquid things, and those things get destroyed. Therefore, it is just a pure macro cycle. This is nothing unusual. It's the same cycle everyone grew up with. People just don't see it that way because the moves are so ridiculous, because they don't see things through the volatility. The same cycle as the global debt cycle is exactly the Bitcoin halving cycle, which is also the election cycle. It's all the same, and the global rate cycle is part of the same phenomenon. They are all the same. That's why it's a gift. We have no confusion. There is no need to diversify because everything is the same. Therefore, you just need to choose the assets accordingly, based on your risk parameters. First, as you know, what matters most is the pace of change, not direct change. And the rate of change in liquidity improved throughout the year. And by most liquidity measures, whether using global M2 or other liquidity measures, we have seen continued improvement. On top of that, using the balance sheet is some real juice. And we've seen snippets here and there of the use of balance. But that was not the main factor. The main determining factor was net liquidity measures in most countries. The Fed's net liquidity actually corresponds to the three main pillars of liquidity in the United States, because the United States is the main driver of liquidity. And on top of that, the Treasury was increasing the general Treasury account, which for a time bankrupted the bond market. The final stage of the bond market was the bond market. We cannot manage this new issue because liquidity conditions are too tight, and then the reverse repository started to deplete, and the reverse repository dropped by a gigantic amount and will probably deplete to a level close to zero, and that offset all the cash flow. Liquidity increased during the year. Fed net liquidity has increased 12% this year. This is a multiplier effect due to devaluation effects and simply general liquidity. And for 12% to lead to 20%, the S&P 48% to the NASDAQ, and call it 150% in crypto. Global rates were set to zero in 2008, and all governments are refinancing all their debts within 3 to 5 years. So you get this picture repeating 4-year cycle, suggesting that global liquidity continues through 2024 and 2025. So we use that as our main guide. Now, it won't be perfect, but it seems that way because of election years. What usually happens in election years? Then we look at global liquidity and ask, what is happening in China? Well, they are currently facing a deflationary crisis, and the result will be more bells and more liquidity. Europeans look like this. They will be the first to lower rates, so there is liquidity. Wherever we look, the UK will also follow at some point. So in this case, the main liquidity drivers of the Federal Reserve, the Bank of England, the ECB, the People's Bank of China, and the Bank of Japan have been easing all year through yield curve control. We'll also see what they do. We think people are confusing current economic conditions with the recession they desperately want. While markets ignore it, forward-thinking things like cryptocurrencies and technology discount it until 2022. They all have raging bear markets. We have the Russell 2000, oil, copper, all those things in today's slow economy. Are we headed for a full recession or not? It doesn't really matter because the price was in line with the products we were interested in. But from a forward-looking perspective, all ISM forward-looking indicators point clearly upward. Therefore, we are at the end of the cycle. This does not mean that inflation will resume from now on. With inflation lagging far behind rents and homeowners' equivalent salaries, it is expected to continue to deflate throughout 2024, particularly at the central level. And we believe that the overall level continues to decline, so we still think headline inflation will probably hit zero next year, as well as core inflation, which we think no one is prepared for because everyone is in the stubborn inflation camp. Now, let's worry about inflation during the next business cycle when it heats up, not at the beginning of the business cycle. It's macro summer. The transition from spring to summer typically results in lower inflation and higher growth, and that's what we're seeing. Everything that looks forward is clearly moving from macro spring to macro summer. We assume that central banks will use balance sheets to finance interest payments. Perhaps this is not the case, and therefore perhaps there will be less currency depreciation. Therefore, asset price increases are not as strong. But in some of the other code cycles, we didn't use the balance sheet and asset prices were still quite strong. That's why we continue to think that there is liquidity. We not only know what type of liquidity. The other problem is that they are somehow trying to issue debt without using the balance sheet. That's all for today. Let us know your views in the comments section below. And don't forget to like this video before leaving. Thanks for watching.